Yo guys, what's up? And welcome back to the trade recap of the trade that I took yesterday. As you can see, I entered a short entry, which was a bit risky. And I will explain you in a bit why it was a bit risky. But before speaking of the confluence that I had, let's just see what happened pre-market. So we can see that we had insane consolidation. We also had this insane 4-hour, like this entire move to the downside was basically a huge 4-hour fair value gap. And yeah, market was consolidating and working its way up into this imbalance right here. I also drew the equilibrium for me from this entire leg down, which we actually hit. So yeah, I was, to be honest, bearish yesterday. I wanted to see all these sell side liquidities down here to get taken out. So I was targeting these liquidities. I was definitely bearish, which was not a correct bias, as we can see, because market actually pushed even higher and swept out all-time highs. So let's just see why I entered short and why it was a risky entry. So as you can see, I marked out high time frame liquidities, buy side and sell side as always. Let's just mark out also these 50-minute highs up here that we formed pre-market. And ideally, I wanted to find a nice short entry. As I said, I was bearish and I wanted ideally this 50-minute high getting taken out after market open, but unfortunately it got swept out before market open, like literally like I think 2 minutes before. We can see in a minute on the 1 minute time frame, but it got taken out. And I was like, damn, we have this huge 4-hour fair value gap. We just took out equilibrium pre-market. Also, we have London lows, Asia lows, all these pre-session lows right here, and they're just waiting for market to get swept out. So I was like, okay, I know it's not macro time, I shouldn't enter so early, but this is just too tempting. I have complete bearish confluences. Let's just use this momentum of the pre-market sweep and maybe I will find some further confluences. So here you can see this wick prior to market open was the pre-market sweep. We immediately broke structure to the downside right here. This was the 1 minute break of structure. We formed this bearish fair value gap, this 1 minute bearish fair value gap. Let me mark it out for you again. Yeah, and after we broke structure to the downside and we formed this bearish fair value gap, we actually filled this fair value gap. We got a bearish reaction out of it, and I was like, I will use this momentum definitely. I enter right now with low risk, stops above the pre-market sweep, and just target these sell side liquidities that we had down here. I was even thinking that maybe the momentum will be strong enough to even flush all the way to the downside to take out London lows. But unfortunately, as you can see, it was just not strong enough momentum to the downside. We didn't make it all the way down to London lows, which I immediately wanted to get taken out. I really wanted to see this. This was a strong TP for me. I definitely first planned only to close my entire position down here, but I saw that after we took out this 15-minute low that we have a nice response to the upside, which we can see right here. Oh, wait a second. So yeah, this was my first take profit. Eventually, I decided to take out here half of my position and move stops to break even. Why? Because I saw after we took this TP out that we have immediately response to the upside, and this was also time for macro. So yeah, definitely a risky entry to short off of a pre-market sweep, but I had my confluences, my bearish confluences. I got my first take profit hit and then moved stops to break even, and then I got stopped out at break even. So definitely not the best entry, I would say, but also you have to think that sometimes you just have to execute, and if you see a high likely possibility that your trade will go in the direction that you wanted to see, then just execute it. You know how many times I was sitting in front of the chart and I was like, damn, I knew that this move is going to happen right now, but I didn't execute the trade. So if you trade almost every single day and you sit in front of the charts, you will develop a market experience where you have a higher probability guess developed. So whenever you think, or whenever you even have your bearish confluences in this case, with the pre-market sweep, and you can imagine that market is now pushing down to take out these liquidities that we have here, these relatively equal lows, these low resistance liquidities, then enter the trade. Why shouldn't you? You have all your confluences. Yes, it's risky because it's for macro time opens, but it's still a valid trade. I won with this idea. Of course, this probably wasn't the move of the day, because the move of the day was probably catching this long entry, which we will talk about in a second. But I just want to show you, especially with this example, that sometimes you don't need to catch the main move for the day. If you find your confluences, and if you find an entry that you're confident about and that you can imagine playing in your direction after all this time you spend in front of the charts, take it. If you lose, you learn from it and you move on. But don't sit in front of the charts and be like, damn, I wanted to take this trade. Why didn't I take this trade? You should never have this thought. Always execute when you have the slightest feeling that your trade will play out. Because in the end, it will play out, and then you will be happy if you took the trade. If you didn't take the trade and it played out, you will be angry at yourself and you will be asking yourself, why didn't I execute? So many people have this weakness. They don't execute. Just execute. You shouldn't be scared of losing money. If you are scared of losing money, then you're probably not trading with the right amount of risk or the right amount of account size. So place a trade. If you get stopped out, move on to the next trade, but execute. This doesn't mean that you need to take every single setup, but it just means that if you have a certain feeling, if you have your confluences, execute. You have to see this like a game. And if you have a weird feeling in your stomach because you're afraid of losing, then you're probably not having the right risk management. So every time when you get stopped out, okay, it's a small loss because of your good risk management. Maybe you don't risk more than 1% of your account size, maybe even less, maybe 0.5% of your account size, but you should risk always an amount of money that you're also good with losing. And only if that's the case, you can also enter such trades that I did right here, where it's a high risk, because we entered short off of a pre-market sweep. Yes, we got our confluences, but it was still risky because the first 15-minute candle can wick very, very strong in both directions. But this time I got lucky. Why did I get lucky? Because I executed after I saw my confluences. My market experience could imagine that we moved down, so I entered. And this was also not the first trade entry that I took off of a pre-market sweep. If you watch all my trade recaps, you will see that here and then sometimes I take entries off of pre-market sweeps. So I am already experienced with this, and I execute if I see such opportunities. Okay, with that being said, let's just see now what would be the better trade to take today if you would have waited for the macro time to open. So let's just mark it out. Macro time opens 20 minutes after market open. So ignoring the pre-market sweep and just patiently waiting after market open, you would see that market pushes down, takes out this 50-minute low resistance liquidity. What are we going to do from here on? Of course, every time when market hits a key level that we marked out, we want to see how market is reacting off of this key level. And the best thing, or the best way to see how the market is reacting, is scaling down to the 1 minute, especially when we are very close to the macro time to open. And as you can see, we had this immediate push to the upside, which is a great, great sign for a liquidity sweep. As I said many, many times, just imagine the market hits a rubber band here and it gets stretched and then fires back up. This is the typical sign of a liquidity sweep. You could have entered immediately after we broke structure to the upside. But this would have been an entry that is not in the macro time. So if you would still, after the break of structure, wait patiently for maybe a better setup to form, more confluences, you could have entered off of this 1 minute fair value gap that we tapped in, got a bearish reaction out of it. Additionally, from this swing low to this swing high, we also took out equilibrium, respected this 1 minute bullish fair value gap that we formed, got a bullish reaction out of it. After the liquidity sweep, after macro time opened, execute. What more confluences do you want? I wasn't paying attention to NASDAQ for any S&T divergence. Maybe we even had one, but yesterday my NASDAQ chart was kind of bugging, so I didn't have the opportunity to watch the NASDAQ chart. But this right here would have been the better trade for yesterday. Maybe, yeah, I mean, not better trade, but also it would be a nice possibility with all these confluences, with all these building blocks that I'm trying to teach you to catch a nice move. And then for target liquidities, for take profits, because we didn't have any highs on the 50-minute, just see where we can take TPs, maybe mark out this 15-minute, this 5-minute high as a take profit, this 5-minute high, maybe even this 5-minute high, and so on and so on. And as you can see, yeah, all of them, damn, that was a voice crack. All of them got taken out. Yeah, probably the better trade for yesterday's day, for yesterday's trading day. But again, I shorted this entire thing with this tiny wick. Wait, let me show it. With this tiny wick, I had a winning trade. Yeah, was it the best trade for this day? Obviously not. Did I win? Yes. Does it always happen? Of course not. But why does it happen many, many times, especially for traders that are already experienced? Because they are experienced. It's easy as that. Execute when you see your confluences. Don't hesitate. If you're hesitating, this is probably an indicator that you are not comfortable with losing the money that you're putting at risk. So yeah, with that being said, I hope you guys learned something from this trade recap. I definitely keep on learning every single day. Also, I learn more about myself, especially in the psychology space. And I think this is completely normal. Even I learn every single day more and more and more about myself in front of the charts. So maybe yesterday I should have just waited for macro time to open, but I was just like too bearish. My bias was too bearish and didn't catch the right move for the day, but still ended with a nice win. So yeah, with that being said, I hope you guys stay healthy. I hope you guys took something away from this trade recap, and I will see you in the next one. Peace.